for tuning in again to Golden Rule Radio, your weekly precious metals analysis. And without further ado, let's jump right into you, Miles, and put some technical pressure on you.
Thanks, Tori. And we get a lot of questions here, just kind of where do we come up with these numbers? What's the purpose of technical analysis? And I thought with the movements in the gold price here over the last couple of months, it was time to really kind of come back and break down why we see what we see. So we've talked about this compressing pennant in the gold pattern since 2014. Here we came back up and retested at the beginning of last year. We hit those 1365 highs again. And at that time, we had a really interesting sort of fist fight between the bulls and the bears, right? We went to 1365, then 1300, and up and down a couple times. And that's when you're waiting for that breakout in price. So following that break, we have a failed retest, or what's called a failure to return. You're failing to return back up to the high end. So that's when we know the market's turning down at that point. Now, zooming back out, over the next couple of months, we came all the way back down to that compressing pennant on the larger scale, and we knew that was a pretty good argument that we're going to turn back up. So since we've turned back up, and lo and behold, just last week, over the last couple shows, we kept talking about the importance of getting above 1300, and then why 1325 is so valid. Well, that 1325 number, looking back on the chart, is your failed retest point. Mm-hmm. So that's where you have a lot of strength from the bears saying this is the line that we're going to defend. This is our Maginot line in the sand.
The line of resistance to the upside.
Exactly, to the upside. Not only that, you can see a bit of divergence in the relative strength index starting to build in too. Or even though we're well oversold in gold, each oversell is starting to decline on RSI, even though the price is continuing up. So this tells me, for a number of reasons, a price action reason on the failed retest, coming back into the old highs, as well as RSI and divergent, showing me that, of course, we were going to have some defense at that 1325 number. Lo and behold, we're down this week. So the real question everybody asks is, where are we going next?
Yeah, we've obviously come back down. We're below 1310. Do you think the 1300 is going to hold? Not to put you on the spot, but I'm going to put you on the spot.
No, and this is the fun part of technical analysis, because it's not just looking at the past, as you can start to extrapolate some stuff out into the future. So we have that divergence on the daily chart, which is kind of a longer timeline. But if you start zooming that timeline in and looking at the 4-hour or the 2-hour, you don't have that divergence yet. Still oversold, but we're putting in higher highs on the RSI. So what that tells me is, on the shorter time frames, gold is definitely going to turn back up and go higher. Now this brings us to Elliott wave, which everybody loves, and anybody that knows technical analysis knows Elliott wave. Robert is a huge fan of Elliott wave theory. You have what you call a 3 drives pattern. Once you get into this weird sort of zone where you're kind of outside the norms, either on the high end or the low end. Well, we had our first drive up back, end of last year, beginning of this year. We've now had our second drive up above 1300. Our third drive would probably bring us up into the 1360, 1365 mark, which is not only the previous high, which has held multiple times over the last couple years, but now that declining trend line is at about that 1360, 1365 mark. So you have 1, 2, 3 hard drives up. You draw your Fibonacci level there, and any correction back down lines up with a couple of these points here. The 382 is at that 1285 number, which has been big for us for a while. Or we go all the way back down to the 618 at 1240. So there's so much in here that you can see if you just take the time and kind of zoom in and pick a couple of these indicators that you like working with, and finding the locations where you have multiple indicators line up. And this is why it's so important to us, because ultimately, does it really matter if you buy gold at 1250 or 1300? If you know where the end result is.
No, in fact, I'm going to go off on that here in a sec when you're finished, but I want.
But if you can buy it at 1250 instead of 1300,
exactly,
or 1300 instead of 1400, wouldn't you want to?
Yeah, every percentage matters, right? It really does. But that being said, okay, you're talking here in the short term about it potentially turning back up. Are
Correct.
You looking at 1360 or are you looking at 1240 first?
I'm looking at 1360 first, and then if it corrects back down from there, we could see as much as a 1240 push. So going forward, yes, short term, obviously, we're always looking for the ups and downs in the market. Now, what would be fascinating is eventually we do have that breakout out of that long-term pennant. What if it's this next run?
And Miles, you mean above 1360, right?
Yeah, exactly.
Okay, yeah. If we do that, then put your seatbelt on. We'll have minor resistance at the 1400 round number, and then we're going up and going way up above the 1425.
Yeah, because then you're not talking about short-term moves. You're talking about breaking out of multi-year levels. So you have to start looking at the next multi-year level, which isn't 10 or 20 bucks higher. It's $100 higher.
Well, remember, too, I mean, the technical analysis, going back to your original point, why is it important to us? Okay, entry points, exit points in the short term. If somebody's looking to change their position, that's great. If we're going to witness that, a strong move above the 1360, something else is going on. Gold is the ultimate barometer. It's the ultimate reactor. That's why it's at an all-time high in 72 currencies right now. It's telling you that something's wrong with the system and the global economy. If in the U.S. dollar, we're up above the 1400 in short order, something's going on with the U.S. dollar.
Yeah, not just in all-time highs in multiple currencies across the globe last year, but I think it was the largest buying year for central banks worldwide since, 1971, 72 as far as tonnage goes?
Right, and if that's going on, I was asked by another advisor here, Eric, why is that not moving the gold price? And I'll tell you why it doesn't move the gold price. That's what's going on secretly behind the scenes. Okay, central banks are acquiring gold. Central banks also are not letting go of gold, right? All eyes on Bank of England. We'll get to that here in a sec. But with that being said, the key here is that the inception of the ETF market and that coinciding with the futures market in gold, there are so many more ounces that exist in paper, much like the derivatives market, right, than exist in physical gold. That's what keeps the true price from moving. They can control it through the paper markets, meanwhile quietly acquiring the physical, much like our clients are.
Well, and anybody in metals back in 2009, when the equities market started unwinding, saw the split between paper gold futures, options, contracts, ETFs, and the unwinding that took place there versus, say, the spot price of gold and physical bullion itself.
That's right. On that decline, I'll never forget, silver stopped declining in the physical market at $16 an ounce. You couldn't find a 100-ounce bar or a silver eagle for under 16 an ounce.
You couldn't find a silver eagle for under 18 bucks an ounce.
But the silver spot price had dropped all the way down to below 8. I'll never forget that. So the premiums were just sky high, but the truth was being told in the physical market. And we'll start to see that story play out again at some point in the near future. But, since we just mentioned the silver, aren't you also of the camp that it's a similar story as to what we're seeing in gold with these, breakout and retest levels?
Yeah, silver almost identical to gold if you look at some of the same levels. You had that same sort of fist fight. Broke down below 16, had the drop, came back up, retested that exact same FTR, that failure to return back to the trend. So that's where we came into. That was right at the 618 fib, and we're back down a little bit. Similar to what we'll see in the dollar, silver is holding above this declining trend line built into the floor that I'll draw here on the chart. But other than that, yeah, silver's lagging behind gold percentage-wise. We know that. That's why those ratios are still above 80. But I think any gold and silver owner out there knows when the pedal hits the floor, the white metal is probably going to play a pretty aggressive catch-up.
Meanwhile, platinum's holding above that 800 figure, and it's holding that rising trend line too, and it's almost up to 800 itself. What about palladium, though, the lone wolf out there?
Palladium's trickling back up. We hit that 1430 number. We could continue back up there. If we have our reversal, could be a double top, could be some divergence like what we talked about in the gold. But yeah, we'll just have to see. I mean, palladium's real hard to figure at this point because we're still in uncharted territory. So there's really no history to go back to.
Yeah, I would say with platinum, silver, and gold, I expect some near future strong upswings. With the palladium, it's a near future strong downswing. So careful there, much like the equities markets, you don't want to be stepping in at the top, but when it corrects, it's going to be a strong correction.
Sure. And real quickly, it is earnings season, so obviously the Dow continues up on earnings news. The only thing I want to point out here as it fights to get back up to those old highs is that the transports are still lagging behind the Dow. The industrials have increased a larger percentage and more money than the transports have, which still indicates that we could see some softening in the equities market when we do finally come out of earnings season, hit that top, and then figure out where the natural direction of the market's going to be.
So think about it this way. I mean, Bank of Japan, Bank of China, they can plug a bunch of money into the U.S. markets and drive the industrials higher, the S&P, the NASDAQ higher. That does not mean that it's the economy or the health of the economy that's driving it, because that's more of what the transports are telling you, is what's really going on at the fundamental level in the economy that then has a secondary effect.
If you're not shipping stuff, it doesn't matter if you're selling stuff.
That's right. But what we are seeing here, and let's transition here, Miles, for a second to the central banks. We're now going to see Bank of China just pumping a ton of money. The floodgates are open, right? Liquidity is going to flow into the United States. That's going to be part of this Trump and Xi promise here, this trade pact that they're going to make, is that they believe that they can spend their way out of it. It's a communist country. They can print, not be held responsible in any form or fashion, and not worry nearly as much about inflation if it's heading to the United States. I don't think people understand the secondary effect of Chinese dollars hitting our market, but that's opposite of what we've seen. It's been Chinese goods hitting our market rather than Chinese monies hitting our market. The flip side of that is you're actually seeing Chinese real estate monies flee the U.S. market. So at the same time, the Chinese government and the central bank is demanding that Chinese investors pull money back home. So they know that they're going to need those dollars to come back to roost, only to turn around and put it into different aspects of the U.S. markets.
Well, Tori, on the same topic as central banks, tell us a little bit about this Bank of England, Venezuela thing that we've been following.
Well, Bank of England seems to be in the middle of all these messes. And, obviously they were the world reserve currency for a long time. They have a strong central position in global finance. But what they've also become is sort of the primary gold store for other nations, right? The Bank of England has even held some of our assets. So that being said, Venezuela, we see ask for their gold back. Robert talked on this last week. And isn't it interesting that as soon as they demand their gold back is when things really started getting stirred up, starting in November of 2018. That was the death knell to Maduro. This isn't only about oil, right? Now you've got the Bank of Australia demanding, Venezuela wanted $1.2 billion. Bank of England says no. Australia wants $4.4 billion. Bank of England saying no. Right? So what's going on in the world scene with the physical gold? Yeah, we're talking about central banks acquiring gold, but that's what I was saying earlier. They're not letting go of it either.
Any personal gold owner, myself included, one of the main reasons I leave some of my savings in physical precious metals is because I know if I have an emergency, the savings account is gone immediately. The last thing, because it requires a little bit of effort that I'm going to look at getting my hands on, is my physical gold. It takes some effort to actually physically transport it somewhere, get it liquidated, and get the cash out of it. It's sort of the last line of defense. So it makes you kind of wonder if it's a self-fulfilling prophecy. Was the fact that they were unable to get their gold the reason that they immediately fell into these dire straits? Or was the gold the last line of defense before they were going to fall into the dire straits to begin with?
That's right. Regardless, it shows the continued strength and legitimacy of gold on the world scene. Sure. Central banks want fiat currencies everywhere, right? Well, that's okay. But what you're saying is the same thing that was going on in Venezuela and still is. Imagine holding ounces of gold in Venezuela. What does your personal position look like now in that economy?
Well,
how are you thriving?
Talk
right?
about privacy and ownership, right? I'd rather own physical ounces in Venezuela as a Venezuelan citizen than own physical ounces in the Bank of England where they get to dictate what I'm allowed to do with my ounces.
That's right.
Now, I'm not a huge fan of Maduro by any means, but technically those are their ounces. Should they not be allowed to do whatever they want with them?
Yeah. I think that they're nervous that he would take him and run. Right?
Yeah,
so
buy himself
that's
a little island somewhere and let the fires die out.
So before we leave Venezuela, just briefly, on this whole socialism issue, Trump shot a shot across the bow in his State of the Union address last night. And he specifically said that the United States will never be a socialist country. So I love the fact he made the statement. I'd like to put up some pictures here of the response on the faces of the socialists sitting in the audience.
Yeah, big smiles from Bernie Sanders and Ocasio-Cortez.
Yeah, and Harris, and that tells you all you need to know. He can say that, but as we get into this transformation of the United States political scene, just be aware, Miles, I love your technical analysis. You know that. I use it as an advisor every day. We all do. That being said, just look at Venezuela. Look at the faces of the socialists sitting in the audience. That's why you buy gold.
Well, technical analysis is a great plan. And, like Mike Tyson said, everybody's got a plan until you get punched in the mouth. So when you have one of these political events take place, you can throw all that out the window and just be grateful that you've been accumulating ounces over time in a protected storage facility or within your own home.
Well, let's wrap it up. Miles, thanks. We missed Robert King Dollar. We'll touch base on the dollar in further detail next week. But make sure to follow us on Twitter at ICA Gold and subscribe to this podcast by clicking the subscribe button below this video.
You can also find us on Facebook at McAlvany Financial or swing by our website, McAlvany.com. And as always, if you have any questions or want to speak to any of us directly about your personal portfolio and metals holdings, you can give us a call at 800-525-9556.
Thanks for listening. Have a great week.